Hi, I'm John Stevenson, the Guaranteed Retirement Guy. Today we're going to be talking about the best annuities for those who are nearing retirement. So if you're retired or you're getting very close to retirement, then listen up, you're going to love this video. So with annuities, especially if you prepare early, you get a lot of lifetime income. So it depends on the type that you're looking for. You've got SPIAs, you got DIAs, and those are just immediate and deferred contracts, and they're irrevocable, and they're good for certain situations, and they're also good if you want to guarantee incomes for a certain amount of time, like a certain term. And then you have income riders over here that are a little bit more flexible. They allow you to pick when you take income whenever you want. You don't have to choose the date right in the beginning, and you can defer it for 2 years, 3 years, 4 years, 10 years, it doesn't matter. And so every year you wait, it just goes higher. So that's kind of nice. They give you the flexibility. Most people that contact me, they want those, and they want the highest income they can possibly get. So I show them all the options. And if you want to go to my website, johnstevenson.com, you'll see my calculators. You can actually go in there and see for yourself. You can do your own research, and then when you're ready, you can reach out to me. So there's a way to book a call on my website, and there's also a way to book a call right below this video. There is a link that goes directly to my calendar, and you can book a call there as well. Okay, and we can talk about what annuities you're looking for, and of course, I'd love to help you if that's something that works out for you. So anyways, I'm not going to try to push you or try to sell you. I just want you to be able to see everything that's available for you. Okay. So I'm going to share my screen because I wanted to kind of just show this. It's really nice visually to see how things work. And then as you do your search, it'll give you hopefully some more understanding on how to prepare for your future. Okay. All right. So I went in here and I say, okay, this person, and they're married. And a lot of people that reach out to me are married. But if you are single, then the income is going to be a little bit higher to you, okay? Just because the insurance company, they're on the hook for for one life versus 2 lives, okay? So the risk to them is lower. So, all right, so you've got $300,000. I'm going to base it off of you living in California, and your spouse is 60 and you are 60, okay? And I'll show you immediate income, and then I'll show you deferred income. And this is an income rider. Okay, so if you go to my website and look at income rider calculators, that's going to show you the highest lifetime income. All right, so if we go here and say, all right, well, immediate income. So if you were, let's say you're retiring right now and you want to take income in a month, okay? Then the highest that you can get from $300,000, and this is for life, is $18,540 per year. So roughly $1,500 a month, okay? And that's dropping in your account month in, month out for as long as you live and as long as your spouse lives. Okay. And this is with Gillico, good company. I've worked with them a lot. And then you got the next one is Pruco, which is Prudential. So if you're looking for maybe a little bit higher rated, then I would suggest them. And you'll notice that the income is like virtually the same. So, and they're A+ rated. Prudential's been around a long time. Okay. Meritage, they're A rated. They've been around for a long time as well. But the income's a little bit lower. Then you got Corebridge, Sentinel, NASA, Allianz, and all the rest of the options. Okay. But if you're looking for highest income, Gillico will give it to you. If you're looking for the highest income and also a very, very highly rated company, then it looks like Pruco is the best one for an immediate payout. Okay. So, you might not be thinking about taking an immediate payout, but it's good to know because if you take it right now and you live 30 years, you're taking out quite a bit of income. And if your spouse lives even longer, they're taking it out as well. Okay. So let's go here and say, well, I don't want to take income right now, John. I'd like to wait till I'm 62 because that's when I'm going to take my Social Security. Okay. Well, and this is very common because a lot of people will wait to this. And if they're waiting till this age to take Social Security, then a lot of times they will wait to take income from their annuity. Not always, but it's a good rule of thumb. All right. So with this, you'll notice that Gillico is not the top option anymore. Neither is Pruco. So Prudential is down here. They're not too far off. So you can see they're a good option for immediate and also a decent option for deferred. It's just the $21,437 is not as high as the $22,289 that you can get from Corebridge. Okay. So Corebridge is better for deferred. Okay. And you'll notice they're followed by Equitrust, F&G, National Western, and American Equity. Okay. And the list goes on. So, all right. So if we look at this and say, all right, well, what if I want to wait till I'm 65 because, I'm making money, I'm not going to quit, and I want to work until we have to get on Medicare. Okay. And that is a strategy that is very common because people don't want to pay for their own insurance. But let's look at this. So if we go down and say, all right, well, it looks like Corebridge is still winning out. So if you were thinking, I'm going to take income in the near future, maybe in 2 years, but I don't know, I'd like to be able to be able to decide at that point if I want to keep working. Maybe I'll take it in 3 years, 4 years, or 5 years. It looks like during that period, Corebridge is beating everyone out. So that is a wise choice to make because you know that if you take income anytime between 2 and 5 years, Corebridge wins. Okay. You notice American Equity starts getting up there. They'll actually inch up slowly and they'll start overtaking over time because even though they have a lower payout in the beginning, they offer much higher payouts the longer you wait. Okay. So, and again, that's why we want to talk, because if you are thinking I'm going to take income in 10 years or 15 years, there are different annuity contracts with different carriers that are best for that. Okay. All right. So you can see all the different options again. And some people just have a certain company they want to work with, like Allianz, a good company. They're the largest in the world. They got $3 trillion in assets, and that makes people feel comfortable, especially when they're throwing in $1 million or more. A lot of times when you're throwing that into one contract, you want to work with a company that's been around over 100 years, A+ rated, and it's nice to know they're the largest in the world. Okay, so Allianz is very popular for large premiums. Okay, and so is Mass Mutual. Mass Mutual is A++, although they are a fraction of the size as Allianz. Okay, and they're virtually the same income. Okay. So you could spread out contracts. You could put maybe $500K in one, $500K in the other if you want to do large amounts, but you wanted to just kind of stay between two companies. You can do that too. Okay. That way you can actually activate income at different times. You might say, I'm going to take income at 62, and I'm going to take income at 65, and then maybe I'll set up a smaller one, a third one to take it at 70. You can do that because the power of deferral will give you higher income later on, the longer you wait. So speaking of that, let's talk about how that works. So I'm just going to go to the top one. I'll say, all right, well, Corebridge is the top one. And you might be wondering, well, how does this work? Okay, how is this growing my income? Like, how am I getting higher income the longer I wait? Well, it's kind of like Social Security. You know, the longer you wait, the more you get, because mortality tables is telling the IRS, they know exactly how long we're going to live. And so based off of those tables, they're like, okay, well, if you wait longer, we're going to give you more because the chances of us paying out more, longer is lower. And so, the payout is higher because we don't have to pay it out as long. Okay. So taking a look at my screen, I want to show you two different scenarios. Okay. You've got guaranteed values right up here. You notice the income's $29,070. Okay. This is after 5 years. Okay. So that's not different. That's guaranteed. That's the most important thing, by the way, the income. All right. And then we go to hypothetical. Hypothetical, the only difference is the index that this is tied to. Yes, it's tied to an index. The index only, though, all that it really helps is the account balance. That's all that it really affects. So it's really the death benefit. So if the index earns 4% over this time period, it's gonna the account value is gonna last longer. It'll last to your mid-70s. But maybe it doesn't earn 4. Maybe it earns 6 or 7 or 8. Then at that point, it might last to your 80. What's important to note here is the income never changes. Okay, so this is why you buy the income rider. You buy it for the income. You buy it for the pension, not for the account value. If you want like an account value to stick around, you need to pick a different annuity. Okay, fine. And I'll show you. There's different annuities with different riders and riders that have no fees. Okay, and you'll have much lower income and you'll be able to leave some money behind later on when you pass away. Okay, so those are best for that. But most people who reach out, they want highest income. Okay, and so that's why I'm showing this in this example. So anyways, you'll notice if you take this income out, by the time you're 95, you've taken out $900,000 from only a $300,000 investment. Pretty nice. Of course, if you live longer or your spouse lives longer, they continue to take it out. And this is why I wanted to show this to you, because in either of these scenarios, no matter how long your death benefit lasts, what does last and what's contractual is the income. And the income far outlasts the account value. That's why you always want to do a joint payout if you're married, because if you don't, if you die in your 70s, mid-70s, there's no death benefit for them to turn into income. And so you want to make sure you select the joint so that the income continues to them, and you select that in the beginning. If you select a single, you'll get a higher payout. Maybe it'll be like $33,000 a year instead of $29,000. But the difference is if you die first, then that money stops. And if there's no account value, your spouse doesn't get anything to create some more income for themselves. So that's why joint is always, really the best possible option, in my opinion, if you're married. Okay. All right. So this is really how this works. I really hope this has been helpful, because when people are searching for annuities, they're looking for the highest payout. Okay. And there are a lot of options out there. If you want to just kind of peruse through my website, go to johnstevenson.com. You'll see the annuity calculators there. You got the SPIA and DIA contracts. The SPIA is an immediate payout. The DIA is deferred. Okay. And those are irrevocable. You pick the date that you want to take income and it is set. Okay. You can't revoke it. You can't get your cash back. I mean, that's literally how it works. The income will start. You can set up a refund option, and that's always recommended. Just, in case you don't use it, you want to make sure the money's given back to you and your beneficiaries. And those are great, especially if you're looking for income for someone who is a non-spouse. A SPIA or a DIA contract is great. A QLAC is just for people who want to defer RMDs up to the age 85. So that is popular for some people that want to defer up to $200,000, at least as of the date of this recording. That's how much you can defer in RMDs. So it just depends on what you want to do with that. But if you're looking for highest guaranteed income, then check out the income rider calculator, because that is what will show you the highest possible lifetime payout. Okay. So anyways, hope that makes sense. If it is of any value to you, I hope that you will hope you subscribe to my channel so that you can get all of my awesome content that I push out every single week. Okay. I appreciate you watching. If you want to book a call, again, there's a link below this video. There's a link on my website to book a call, johnstevenson.com. And you just got questions, give me a holler. I'd be happy to help. Of course, I'd love to sell you an annuity, but no one likes to be sold. So if you book a call, we're going to be talking about what you're looking for, and I'll answer your questions. And then at that point, you can decide what you're going to do. Okay. Fair enough. So again, thanks for watching, and we'll see you next time.